Hello, everyone. Welcome again to this week's episode of Policy and Profits. I am Antoni Esposito, founder and CEO of Ascalon 6 Capital. I'm alone today on the desk without my very respected and exalted partner, EJ Antoni. He's actually busy this week, too busy for us. So we're going to skip his portion of the show, which I know will be a big gap. We'll fill that next week. And we're going to go directly into the profit side of things. Just for a second, I know everyone knows this, but I'm managing at Ascalon 6. We manage a very small basket of futures products, and we manage those baskets on a technical strategy that is proprietary to our fund. We're in the S&Ps, we're in the Russell on the equity side, we're in gold, crude, and front month VIX away from equities. It's been a really crazy week. We've had a lot of headlines. In addition to the fact that we were coming out of a pretty crazy 2025 and into the first week of 26, we've had a kind of a drive-by pickup in Venezuela by the United States military to bring Maduro back for a little chat and his wife. We've had the Supreme Court looking to overturn the tariffs ruling. We've had some major economic announcements. We're looking forward to a new Fed chair. And I mean looking forward to, not in time, but thank God he's coming. We're looking forward to what does the Fed do? Our cuts, how many cuts this year should we expect? Watching rates, watching valuations. There's just a ton of things going on. In addition to the fact that we now have some turmoil in Iran, more than normal or a little different than what we normally see. So that could be a problem for the energy markets. Venezuela, again, a new input, a new unknown for energy. And we have China and Russia who were obviously embedded in Venezuela along with Iran. And now everyone needs to decide what to do now that the United States, under the Don Roe Doctrine, as President Trump called it, is retaking control of the Western Hemisphere. So that's a lot. It's adding to volatility. It's adding to the markets. It's adding to the fun. I want to go into one thing here. I'm not going to go into gold or crude. I know that they're moving a lot. Crude is really a bit of a beast right now, bouncing off of multi-month or actually the lows at the 55, 56 level have held for over a year. Running up through 59 now. We have front month crude at 59.60, which is pretty significant that we're getting back to the 60 level. Gold at all-time highs today. Silver's been a mess. We had a massive run, and then it looked like it was a big rebalance in one of the commodity funds, and we saw some real movement in silver, 8 to 9% swings on a daily basis. But I want to stick with the S&P 500, and I have that chart to pull up. These are the front month S&P 500 futures. So the E-minis on the front month. It's a continuous contract. It's not a tradable contract. It's a contract that we use to smoothly link together the pricing of all of the futures contracts in the S&P 500. Okay. I've been writing in the morning note, and I would love for everyone to go out and see that. You can get that on my website at ascalon6capital.com. And the 6 is obviously a Roman numeral VI. You can go out on X. I am at CMT_Anthony. I issue it every day in both places. This chart is extremely interesting. It's a chart that we're running from the end of October, around October 30th on that first peak, down to the bottom trough, which was November 21st, and then through our way up. Really simple chart with some support resistance lines, pivot points marked out within the chart. But the main point of the chart is this. We have created and we have put together here a pretty large intermediate term ascending triangle. What does that mean? That means we have a formation here where the top of the formation, the resistance line, is basically a horizontal line just above 7,000, which coincidentally is where we are right now, 7,004. And almost at the all-time high, which we reached about a month ago at 7,014. That resistance line is horizontal. The support line of the formation is an ascending support line, meaning the lows coming off of those equal highs are actually higher each time. So what does it say? Emotionally speaking, if you're just going to be a pure technician and you're just going to look at the picture, which I love to do, what we're saying is the buyers are getting more and more antsy to not let price drop before they decide to step in and buy. The sellers are holding firm at 7,000 at resistance. Buyers bring it up, they sell it down. Buyers bring it up, they sell it down. But every time they sell it down, the buyers step in at a higher level. They're getting more and more aggressive, less and less willing to let it come lower. We're also seeing momentum improve throughout this process. So this is a very bullish pattern for me. Remove all the noise, remove the fact that I am obviously of the school of thought that we are way overvalued, and I am. I think the markets are way overvalued. If we look at the Shiller PE, which is my go-to, we're at .com bubble levels. Put that all aside. Right now, the S&P 500, this chart is telling you that there is a breakout about to happen. And that breakout should be about the measured move of the depth of the triangle. So if we look at 7,000 as the top, that R1 resistance line, all the sellers are there. And we look at that first trough down in November, which was around 6,600, just below, but let's call it 6,600. That's an ascending triangle with a depth of 400 points. If we flip that on its head and we call that a measured move up from the 7,000 level, we should see over the like amount of time, the next 2 to 4 months, we should see a measured move to the 7,400 level. This is my full expectation. There's going to be a lot of chop. There's going to be a lot of volatility. But the market right now is poised and telling you that it is going to move through, at a minimum, the 7,300 level coming out of this formation. Now, as you know, I love to hate them, and I do. But at this point in time, I really can't hate them all that much because the broader picture here is pretty bullish, barring any absolute ridiculous event. I think that the broader picture here is bullish. This is a pretty simple chart, but it's very telling. I wouldn't discount the quality of it or the value in the analysis behind it. Again, everything could get thrown off the rails, and the first thing that I would look for on the downside of this scenario is that S1 support line, which is the support line of this triangle breaking. We want that support line to hold. We actually want that support line to hold all the way to 7,300, 7,400. In the meantime, be ready, be set up to be long through 7,000. At a minimum, don't be too anxious to get short. We saw some real action today. On a 30-minute bar today on the S&Ps, we saw a 50-handle move. There's volatility out there. At the end of the day, it looks pretty good. It's all upside vol. It looks pretty pleasant. If you're sitting in our seat and you're trading through the day, it's a little bit of a ride. Don't be too quick to get short because I do believe that the higher probability trade here is to the upside through 7,000. Those sellers are going to back away. Those buyers are going to get ridiculously aggressive. And everyone that's been shorting it for 3 to 4 months at 7,000 and a little bit below, they're going to have to turn around and cover those contracts, and that's going to be part of the push. Again, I miss my friend EJ. Looking forward to the next episode with him. We'll dig more into policy at that time. There's a ton to go through. I'm sure President Trump will have plenty to say in the meantime. I'm sure Secretary Besson, who seems to be on the public tour, the public relations tour this week. We'll have some good headlines from him. EJ's been all over X at EJ Antoni. You can reach him. You can see him there and see his posts. But for now, we're going to stick to this chart. We're going to stick to a bullish call in the S&P 500, and we will see you guys next time. Again, at CMT_Antoni on X or Ascalon6capital.com. You can feel free to email me as well if you have any questions. It's anthony.esposito@Ascalon6capital.com. Until next time.